Hi, everyone. Thanks so much for joining. We are going to be talking about what's going on in financial markets. So let's jump straight to it. Let's look at the charts. This is the typical chart, which I normally start with. I'm sure you're all used to that now. This shows you global stock markets. And what I want to show you, if you just follow my pointer there, is this sea of green. So we've got big increases across Asian equities earlier today and also across European stock indices. This is because, of course, geopolitical tensions, Iran and Israel. There is a very fragile ceasefire. A ceasefire was announced overnight by President Trump. There have been signs that maybe neither side or Iran didn't hold to the ceasefire, which then led to some retaliatory action against by Israel. But it certainly feels like there's been a de-escalation. It doesn't look like the US is going to join in the conflict anytime soon or drag any other neighbors or friends in with it, like the UK or Europe. So it feels like a de-escalation. That's why we're seeing stock markets rise. As you can see here, Eurozone, the Eurostoxx 50 index, massively outperforming the UK index, the FTSE 100, which is a laggard amongst all of these European indices on Tuesday. Now, there is a reason for this. I'm going to go and just show you a new page, which is the FTSE 100, and it's the biggest movers so far on Tuesday. So as you can see, the airlines, Intercontinental Hotel Group, they're ticking higher. They'd come under a lot of pressure as airlines, some hotel chains as well, was seen as being very exposed to what was going on in the Middle East. And then if we actually look on the other side here, so the sea of red on the right-hand side where my pointer is, Shell, massive laggard in the FTSE 100, really dragging that index down. When Shell is lower, so it's currently down about 18 points today. When Shell is lower, that's a big deal for the FTSE 100 because it is the FTSE 100's biggest value company. So it's got the highest market cap of any other company on the FTSE 100. So that's lower. We're also seeing weakness in some of the defense companies. So BAE Systems, we've got BAT. So we've got obviously British American Tobacco. Now that's a very typically defensive firm. So that does particularly well when tensions are high and geopolitical tensions are high. So they're all coming off. Look at BP there as well, the ninth worst performer on the FTSE 100, but Shell really taking one for the team here today as the oil price falls. So let's go and look at the oil price now. As you can see here, the oil price has fallen below $70 per barrel. If you just follow my pointer, this is Brent crude oil now. So it's below $70 a barrel. It's down about 2.8% today. Year to date, it slipped back into negative territory. So it's back down about 7% year to date. The Brent crude, is outperforming WTI crude, but WTI crude, they're following each other pretty closely. WTI crude trading about $66. Usually Brent does have a premium to WTI, and it's down about the same today as Brent. So that's kind of worth watching. But I just want to show you the intraday volatility that we've seen in the oil price over the last just 2 days. So just since the start of this week. So yesterday we saw some weakness in the oil price pretty much. We didn't see too much increase on the back of the US striking Iran. Traded around about $66. It then shot up overnight to above 80 before falling back again to a low below $66, below $68 there overnight, or just before the UK or just before Europe got in. Since then, it's moved a bit higher, so it's retraced about half of that move. At one point, it was lower by 5%. Since then, obviously, it's given back or clawed back some of those losses, but it's still below that $70 a barrel mark. So I think the market is saying, yes, it's a fragile ceasefire, but we don't expect it to escalate too much further from here. And that could really keep a lid on the oil price. Right now, that lid is at $70 per barrel. So that is what we're watching. If I go back to this commodity page and we just scoot down, just follow my arrow there, we've got gold is down $42 so far. So down over 1%, currently trading 3,326. Gold really hasn't been reactionary to this Middle East crisis. And I just want to show you that. I'll pull up the gold chart now. Gold is still at elevated levels without a shadow of a doubt, but it hasn't reacted in the last week as you would expect it to. I think the markets aren't really treating the Middle East tensions as a major risk-off event. That's because there are other risk-off events to consider going forward, such as US tariffs, earnings season as well as a massive one. But it's really not had a big impact on gold. As you can see there, we're finding good support at the 50-day moving average. That comes in at 3,300, just above 3,320 level. So that's holding the downside downside for now. But obviously, if we see a more committed, the two sides becoming more committed to that ceasefire, then gold could come off just a notch. But we definitely think that 3,300 level at the moment is pretty protected there. Now, I'm also showing you Bitcoin. Bitcoin has been all over the shop in the last two sessions, completely the opposite to oil, actually, as it has fallen as the oil price was rising. So as geopolitical tensions rose, it got to a low below 100,000 earlier this at the end of last week. Obviously, as tensions rose and as we got into the weekend, it dipped again on Monday, as well, as we were a bit unsure about where things were going. And since then, it's just risen. So as this ceasefire has been announced, it really rose. So it's back above 105,000 now. It's up $1,600 on the day, currently trading sideways a little bit. But why does that matter? That matters because there's a lot of stocks in the S&P 500 that are a bit of a Bitcoin play, really. Look at MicroStrategy. That had been the weakest player, the weakest stock on the S&P 500 on Monday. It's since kind of returned to, or we expect it could benefit from this increase. Now, I also want to show you Tesla, and the reason why Tesla launched their RoboTaxis on at the weekend in Austin, Texas. This is with the driverless technology. Now, they still currently have a member of staff in them, but the idea is that that will be phased out. But Tesla stock, look at this candle on the right-hand side here. It's absolutely surged. So it rose over 8% on Monday. In the pre-market on Tuesday, it's rising another 2%. Now, we would point out that the Tesla is still down about 10% year to date. So there is a little bit more upside. There could potentially be more upside to come. Analysts are expecting that just the RoboTaxi alone could generate between 20 and 25 billion in revenue each year for Tesla for its first few years, before rising to about 30 billion in 2030. So that is really something to watch. This could be a big moneymaker. So far, it's gone off without a hitch. It was a long, delayed wait for that RoboTaxi. But what we're seeing is this could be a new era for Tesla, and the stock market likes what it sees. It jumped above all that cluster of moving averages there. So again, we've spoken lots about this, but anything below the 200-day moving average, nothing good happens down there, is what some of the bulls would say, and it's well above there now. So expected to see further increases, and just really potentially could have put a base in for Tesla, short-term base anyway, around about that 280 level. So currently trading, yesterday it closed just below that 350 level. So investors will be looking to target that level, potentially close above it on Tuesday. But overall, what we're seeing, I just wanted to show you as well, sorry, this is the Brent crude oil price. As you can see, it's absolutely slipped there, but trading currently around about 70. But as you can see, guys, lots going on in financial markets, as always. It's all about Middle East tensions. What we haven't really seen is any big moves in the stock prices, even though we're seeing quite a unexpected or quite a sort of fragile ceasefire, I would say. But one thing, the last slide I want to show you here is the dollar. This is the dollar against its G10 counterparts. And as you can see, it is weaker against all of them. Yesterday, the dollar was riding high. For the last week, it had done really, really well. It has since come off the boil a little bit. It's about flat against the Norwegian krona, but it is absolutely losing ground against the Kiwi dollar, against the yen, the Aussie, and the pound. The pound now is getting very, very close to its highs of the year so far. So we're going to be keeping the pound in our sights. I'll just show you quickly that chart just before we go. But basically, the dollar is very, very leveraged, is very, very closely correlated at the moment to oil. So what oil does, the dollar follows. And so what we're seeing in the middle of this crisis, we're not seeing stock markets react in a risk-off way, but we are seeing the FX market. So it's very FX linked, it's very oil price linked. And as the tensions de-escalate, as the dollar comes down, as the oil price comes down, we are seeing the pound being able to extend gains there. So it's currently above 136. 136.30 is the high from last week, the annual high in the pound, so the high of the year so far. And if we keep going in this way, momentum very much on the upside as well for the pound here, then we could see a fresh 2025 high. But guys, thanks so much for joining. That's it from me. Do watch out for that headline risk.